So the accounting profession is continuing to make progress by actually taking visible steps to fix the pipeline.
I'm excited to talk about that one. And here's another one I'm excited about: is the worst of the economic downturn over with?
Yeah, tech is apparently pushing back on the up. We'll see if that's here to stay. And speaking of tech, while ChatGPT is all the rage across all industries, accounting seems to be the safest of the white-collar world professions.
I don't think that's how everyone thought it was going to go.
No, not at all.
Yep.
So a lot of fun stuff to dig into. Let's get flowing. This is episode 7 of the FinTech Flo. What's going on, everybody? If you don't know me, I am Drew Carrick, the Rapping CPA, co-host of the FinTech Flo podcast.
I'm Mike Whitmire, co-founder, CEO of FloQast, inactive CPA, and co-host of the FinTech podcast.
Yeah, so we are excited to get going right here into all the stuff that's happened over the last couple of weeks in the accounting profession, fintech professions, industries. And let's start off with some economic stuff. We've got a chart here saying this from the Wall Street Journal: strong tech earnings led to a rally in U.S. stocks on Thursday. This is interesting because I know early on we were talking about how it seemed that the tech industry was the first to sort of I think around a year ago, they were the first to have the immediate impact. It was, I think, around that Ukraine time.
Yep.
The Russia invasion there. And we thought, and you suspected, and perhaps correctly, that you're like, well, it'll fall first, but it kind of will maybe be able to get the worst of it over with early on.
I think that's what we're seeing. I hope that's what we're seeing here. So I think the tech market started going down kind of end of 2021 and then really accelerated through Q1 of 2022. And this chart is obviously only going back, a few weeks here. This isn't the craziest historical performance here or anything, but 2021, NASDAQ fell by more than everybody else, and then hopefully, coming off a rally here, it's starting to rally more than the other indexes. I mean, I think this is what you would expect. So NASDAQ would come back first, and then the others would follow. Mm-hmm. The question is this a temporary thing based on one good earnings session, or is it the beginning of a trend? And it makes sense. The market is now investors. By the market, I mean investors. Sure. Are rewarding profitability more than they did 2 years ago, let's say. And so, these companies are all making the right moves to improve bottom line, shore up operations, and not put themselves in bad cash positions. And so the market's rewarding that. And I think it might be, if you want to take the short-term view on it, it's just the market's happy that these companies course corrected and are doing what they want them to do, basically, and are happy to invest now. The long-term bull market is like, hey, people are feeling good. Maybe this is the new bottom of the market, and things are going to go up from here. I don't have a crystal ball. I don't know what to say, but it's nice that it's at least rallying a little bit.
Well, so I guess kind of related to that, we're not necessarily touching directly on this, but it is a related fact. Is the Fed just raised the interest rate by another 0.25% there? Yep. They said they indicated that this was perhaps the kind of flattening off. So I mean, all of these things are intertwined in how they're related. Could that potentially mean that maybe the worst has passed behind us? If
it's the last rate hike, that would be a wonder. Because I mean, how do you raise it another 25 basis points when there's another bank going under? Right. Increasing interest rates is what's causing a lot of these challenges, and so it's pretty frustrating, quite frankly, to see the Fed continue to raise rates. I wish they had cut it last time. Mm-hmm. Cut some rates, and really when SVB was going down, I think that would have shored up the market, but. They got to go flat from here. They can't do another rate hike. And I don't know, I'm not a fan of breaking inflation through this means right here. I think it's a really unhealthy thing for the country. And I think they're finally starting to say the word recession. Is that correct? It's finally rearing its ugly head.
I mean, it's been, I feel like, circulating around, and it's like, hush, hush, don't say that. But I mean, I think everybody with a brain and two eyes can kind of see it feels like a recession.
I think, everyone who doesn't make a ton of money and pays for groceries and whatnot would say, we've been in a recession for well over a year at this point, with inflation hitting people who make the least money the most. So, dude, I hope this is the bottom. I hope it's a turnaround. And I would love for the Fed to stop raising interest rates. I just think it's really bad for everybody.
Yeah. So this the article does say the S&P rose 2% and Dow Jones Industrial 1.6%, and the NASDAQ Composite 2.4%, led by a 14% jump in Meta's stock. I didn't see that one coming.
You buying into the metaverse now? Is that what's going on?
It seems like Meta might have been a little bit ahead of their time, but now with AI, not to get all into the AI conversation, but it becomes so much more real. So
Why is that?
Well, look, nobody wants to sit there with a we character across the table from them, because that's what they look like when you.
That's very true. Yeah,
and
that Zuck video.
Yeah, it's terrible. It's like that's not the remote work environment I'm imagining.
No.
But if you're at the point where like you can almost plug in and it's almost Matrix-esque, where you're creating a universe where it's like a video game like Grand Theft Auto, except if it's an open world, and the rate at which AI can develop and create things and fix itself and do all that, you have a vast, never-ending world and universe that you can go exploring. You can explore the entire world from your bedroom, and it's all going to create these NPCs, other people, other animals, trees, plants, buildings, that you can now enter this entire different universe and experience it. That feels like reality. I mean, you've seen what AI is capable of doing, so. I don't know if maybe that's why you could see this jumping up.
I don't think why. I think it's because they did big layoffs and became more profitable. I think that's the reality of it. But that's a really interesting point. Yeah. So and all these, we're going to talk about AI, but it blows my mind how much it's impacting the creative space. And all of a sudden, if you've like democratized the ability to create a universe and create characters, and everyone can just be doing that on a grand scale. Yeah, you can create these worlds way faster and have them be way cooler. And maybe that is a big jumping point for the metaverse.
I mean, especially as they gain consciousness in a sense, right? You go into a Grand Theft Auto, each person's programmed by somebody. All right, this is the character that plays, the homeless guy on the street, and this character's played like the businessman who's pompous, and you bump into them and they'll say something. But now you can actually program every single NPC to almost react and interact with you as like a human.
Well, and now you can do some deep fakes and actually be interacting with in a very kind of real person. Man, AI is like, it's cool, but some of this is so scary at the same time. But we've also had our marketing team ask us to not go down the rabbit hole on this too much, so maybe we should. Yeah.
So just keep moving. So perhaps the insight here is that the Facebook parent company reported its first sales increase in nearly a year after stronger than expected results earlier this week from Microsoft and Google parent Alphabet. Both companies gained more than 3% Thursday. So.
All right.
So there is an earnings and a financial reason for why these things are going up.
Yeah.
Everybody loves profit, but a good segue of the creative sector obviously being impacted by AI, but on the other side, accounting actually not as much. And now accounting, I think, was one of the professions that early on, when it came to automation, robotic process automation, and just creating those. I mean, even an Excel function in a sense is a form of RPA. Who is better at accounting, AI or humans? And I thought this article from CPA Trendlines was pretty interesting.
Mm-hmm.
It's got, so I'll lead with a little excerpt from it. ChatGPT, a language learning model chatbot, has garnered considerable attention for its ability to respond to users' questions. Using data from 14 countries and 186 institutions, we compare ChatGPT and student performance for 28,085 questions from accounting assessments and textbook test banks. As of January 23rd, January of 2023, ChatGPT provides correct answers for 46.5% of questions and partially correct answers for an additional 9.4%. When considering point values for questions, students significantly outperform ChatGPT with a 76.7% average and perform better than the student average for 15.8% of assessments when it includes partial credit. So this was actually from a study that was conducted. Now, CPA Trendlines snagged that portion right there from the actual study that was conducted itself.
Quick fix, you misspoke on one. So it was, GPT was 56% correct versus students being 76%. You misspoke and said 46%. So I know we have an accounting audience, so I just want to make sure we got that one.
Fair.
Right, but still a big delta. I mean, that's a 20% accuracy difference. Quite frankly, I think the 76% needs to be higher.
Yeah.
We need to be right with all we do. But yeah, this is encouraging to see. I mean, this is obviously coming from asking more complex questions and everything. But I guess one of the things that I'm starting to realize about this whole AI and automation discussion and will it replace accountants is saying will it replace accounting is just too broad of a question to ask, right? There are like components of accounting that can be and should be automated, and there are components that maybe won't and shouldn't be as well. So I don't know, is that like a thought that you've had around this? Is it too blanket to just say it's going to be replaced?
I think people make blanket statements like that way too often.
It's way easier, right?
Yeah, it's easy to just say, will it replace accounting? But no, it can't. It can't replace accounting. It can replace certain components of the accounting job, but it's not going to replace accountants altogether, and it's not going to replace the profession. It can't just step in and be like, we don't need accountants anymore. We don't need the accounting profession because we have bots to do everything.
Yeah.
I think there are definitely certain aspects and components of things that can be, automated, and then that AI can help do. But I think as we sort of learned when we did ChatGPT takes the CPA exam, the situations that accountants come across in order to do their job are too nuanced and have too much human involvement and considerations to just have a bot that can't think about those things. You can't make it be more skeptical. You can make it pick more things to review, but you can't make it a more skeptical thing, at least to my knowledge.
Yeah, well, and that's just taking the CPA questions where there are answer banks, and they're clearly it's textbook stuff. But when you get into the real world, you're working within a company that has all of its unique processes and systems and technology and reasons for doing things. And so it's even, is there enough knowledge within that one company's data set to automate everything that they do specifically? And I would say in certain areas, yes, but in a lot of the, let's say, decisions around what software should we implement, how does it integrate with this system, how does it go from there? And you're good automating numbers and everything, but you need to have the accounting mind to understand what we should be doing. So yeah. I think it's an amazing tool is what I'm really, where my head's starting to settle out on this. I mean, on par with the calculator, Excel,
yeah.
You could argue, the move to the cloud was really big. Yeah. So I don't know if I were to set it in terms of it's up in that echelon of technology innovation for accountants, but all those things didn't replace accounting. They were just incredible tools. And we'll talk about, I guess, the pipeline a little bit, but we need it. That's the other thing is we need some help. There aren't enough people getting into the profession.
No, that's true. And that's actually a good point you bring up with the whole blanket statement, because that just shows how little people know about what the accounting profession entails.
Totally. If you ask the average person what an accountant does, it's just an accountant's an accountant. It's wait a minute, there are tax accountants, there are bookkeepers, there are controllers, there are SEC reporting people. There's just this whole plethora of accounting. It's not one thing. You can't put it in a box. And some of those jobs will be automated, but many of them will not be automated. And the good news is, in my opinion, those are the funner jobs are not going to be automated. Yeah. More interesting ones.
One of the pitches on the slate that I'm really pushing for, which I think would be totally easy to do, we go down to Venice Beach and we do a little interview thing. Where it's you know what an accountant does.
That would be fascinating.
Man on the street.
What percent would just say taxes? What would you set the over under at?
Taxes? I would say 85%.
I think that's a good line. I was going to say 80%. So okay, I guess I'll take the under. When you go do that interview, I guess I have to take the under, but I think that's a hell of a line. 80-85%.
Yeah, right in that range, because there's going to be some people will know it, but there's also going to be a portion of people that I think a lot of people are going to say, I have no idea. And you think, that just shows you how many tiers there are. There's the level of people that think accountants just do taxes, which is the majority of people who just know what an accountant, who know the term accountants, and they say, oh, that's the person who does taxes. And there's probably a chunk of people, and I bet if I go down to Venice Beach, I'm going to find that chunk of people.
I'm excited for you to do it in Venice Beach.
Right? I think there's going to be a huge chunk of those people that say, I have no idea what an accountant is.
You're probably right. And I doubt you get a single answer from a non-accountant where they're they book financial transactions and produce financial statements. You're not going to hear that from anybody. It's going to be taxes, or I don't know.
I would love to find one person that says, well, there's lots of different types of accountants.
If you find one who is not an accountant, I would be shocked. Yeah. Are you actually going to go record that segment?
I would. That's what I'm 100% trying to do.
I think it's a great idea. Yeah. So,
all right, we got the EP sign off. Everybody,
approved from my perspective.
There we go. Yeah. And that's how the pitch room works. Everybody,
live on air.
So, perfect segue into this whole pipeline issue. This is from Accounting Today, Best of the Week. NASBA, crazy news here. NASBA extends the CPA exam window to 30 months. That's a big jump from 18 months.
18 months
to 30 months. That's over 2 years. It's almost 3.
Okay, so do you really think this is going to make it does this have any impact on the talent pipeline issue?
No, I don't.
I'm trying to think if this is even a good thing. Actually, I'm gonna play contrarian here.
Sure. I would say, if I'm really thinking about it, I think there's people who are planning to get their CPA and there's people who aren't planning to get their CPA, and I think what this does is it opens the door for a few more people who maybe were struggling and this is a real situation. I've run into people at work before who they were at the brink. They hit their 5-year mark. You can't make manager if you don't get this exam pass. And they were on that last part. And if they don't get it, then it expires and then they would lose it. And they were already given that promotion to manager in anticipation that you're going to pass this exam.
Ooh, that's a tough spot to be in. Wow.
And so like you're in a pressure zone. And if you're one of the best workers too, which is why they got the promotion, which is also why they got pulled onto all the clients, which is also why they couldn't study, then you can't afford to have them not working on the client. So they can't even take a month off and go just dive deep into that. I mean, eventually, like they're like, look, we can't afford to lose you, so we'll let you take as much time as you need to get this done. But you know, the rules are the rules. You have to have that finished by the time you start your managerial year. And so I think for those people, it really helps. But I think the majority, I mean, like I wasn't going to wait to work to start doing the CPA exam. I was like, I'm doing this, I'm knocking it out, and I'm forgetting about it.
It's very smart. I did the opposite. I did it while I was working, and I waited. I was on the last day of my 18-month window when I took.
Wow.
It was reg for the third time. I got a 74 on my second time, and then I was so bummed. So I had to study for it. I took it on the last day of my 18-month window, and had I not passed it, I would have lost 2 sections of the CPA exam. And I think I would have thrown in the towel at that point. So I guess that really lit like a fire under me. That created a whole sense of urgency, as you would expect. If you're going to lose 2 parts, like I studied so hard. I got another instructing set, and I got a 87. I was real pumped with doing it, with putting up a pretty good number on it. But that's for kind of lazier people like me, is to have like an 18-month, but like extending it out to 30. Are you just allowing people to get a little sloppier about it and maybe not just getting it behind them? And if I probably would have dragged it out to 30 months had I had 30 months, you know what I mean? Yeah. So it's like, there's some like. That's
a good point. It's the procrastination rule, right? It's like you don't do it until you have a deadline to do it. So in one sense, it actually could make it worse, where people are like, oh, I got plenty of time. And then you forget about all this stuff. I mean, like, it's one thing if it's been like a year since you took the part that you failed and now you got to take it again. It's another thing if it's been like 2.5 years since you took that part. You're studying fresh. You don't remember a thing. Like, to try to take the CPA exam now would be crazy.
Like, I remember my tax professor in college, he assigned some work and he said it was due this Friday. And a bunch of students started complaining. Apparently, not like out loud in the class, but he came back for the next class and he goes, so yeah, I got a lot of complaints around assigning work that had to be due by the end of this week. The reality is even if I told you it was done by the end of the semester, you're not going to do it till the night before anyway. So I don't really care. Just do it on Thursday, and I'll see those assignments on Friday. And he's so right. People work to the deadline, and whatever deadline you give them is what's gonna happen. So that's my argument against this. It's much nicer in the example that you're laying out, or just for people who like do need more time because you work a lot if you're taking it while you're working. But man, you were the smart one doing it before working.
I did not want to try to do those things at the same time. I'm a one focused individual. Pick the thing and just do that thing.
Do what Drew did. Do not do what I did. It was brutal.
Here's what the article actually says, per what the board of directors of NASBA was saying, is they voted to adopt this amendment to UAA Model Rule 5.7. So everybody's got these rules and these fancy terms that increases the length of conditional credit from 18 months to 30 months based on the calculation of conditional credit for exam sections passed on the date that the scores are released. So it's not even from when you start studying. You have a free window to study, and then you take the exam, and then it's not. And then once you take the exam, you still have a free window until the score is actually released.
That feels way more right to me, because there was this weird stagger of when you take it versus when you get it. And I was like, do I need to sign up for this or do I not? What's the deal? Yeah. So okay, that kind of feels like just a good common sense change.
That's a good one. And then it goes on to say extending the 18-month credit rule for taking all parts of the exam is a key pillar of the AICPA's pipeline acceleration plan. I didn't even realize there was an acceleration plan, said Mike Decker, Vice President of CPA Examination and Pipeline at AICPA. That's an interesting job title, Vice President of CPA Examination and Pipeline. Of the CPA. So he says, this proposed change to the model rules better accommodates the conflicting demands of many prospective CPA candidates face as they strive to make a living, pay off student loans, juggle family obligations, and take steps to advance their careers. While there is work to be done to make these amendments a reality in all jurisdictions, this is a positive step for future CPAs in the profession. So I kind of see that as like, well, it's if nothing else for the people who are already active, who are trying to be like, I just need more time, perhaps it just creates the illusion or the appeal for younger people. Like, okay, it's not as daunting of like, I got to knock this thing out in 18 months. So maybe you at least get more people into the pipeline, even if they procrastinate till the end. It's the foot in the door technique, maybe.
I think this helps So that explanation makes a lot of sense, and I'm glad they're thinking about this and trying to do it. I think this move helps people who have already decided to do accounting get their CPA, make it a little bit easier. Because I think of myself selfishly, I was 22 years old. This was like I had work and this. Yeah. It was like how much other stuff did I have going on? I didn't have a family. I didn't have a ton of conflicting obligations. So reading that makes more sense. Okay, I can study a little more leisurely and have more time to to play it out. That makes sense to me. I'm more interested in before that. How do you get more people to major in accounting, or how do you get people to move from other fields into accounting to start doing that? So this is nice and all, but not solving the much bigger issue.
You don't think maybe that, if I'm a student and I'm like, what do I want to major in? It's like, oh, well, they moved it to 30 months.
Did you know you had 18 months in college to pass the CPA exam? No, this wasn't something you were thinking about. You were thinking about this was not top of mind for you.
Again, for me, I'm not a fan because, I do agree with all these components that they're bringing in here. But like I said, I knocked the whole thing out in 6 months. I was like, I'm making this a quick and painful thing as opposed to a long and throbbing painful thing.
That's good. It's good. What was your schedule like for 6 months?
I woke up at 9 a.m. I studied from 9:30 until lunch, and studied from lunch until dinner. And
literally a full-time job.
Literally a full-time job. I just treated it as a full-time job because I had, from the time I graduated, the end of May, until the time my offer letter began, which was start of January, I had the 6-month window. This is my knock the CPA exam window out.
Nice.
Yeah. So I was still able to have somewhat of a life because I just had a job.
Mm-hmm. So you were out with friends a little bit. You could go out on the weekends and hang out. Okay, that's
so
nice.
It was more reasonable.
Because those 6 months before starting to work are also a big 6 months. That's like kind of the last hurrah. Before heading into the real world.
And what I did too, I justified it as well as I graduated a year early from college.
Oh, so, look at you, Drew. Okay, I see.
So I was like, I bought myself this time. It's not like I'm behind any of my friends who've already started working, and now I was living at home. I was just in my room studying. Peter Linto and Tim Garrity, right back.
Your boys, there you go.
So moving on along, have you read it? And this is one that I feel like has been circulating for the last several years. This is from Nervous Fruit. How is there an accounting shortage when major firms are laying people off? I want to know what your initial response is.
Well, it's again, are we using accounting too broadly? And if you look at who's getting laid off, my understanding is this is not auditors who are getting laid off, which is where there's the biggest talent crunch, right? I think it's more the consulting side of a lot of these firms. Yeah. And so, consulting is a side where it's like, hey, when the economy dries up, fewer people are doing fewer consulting projects. That's one of the groups that's going to be hit. There's not enough revenue to go around. Like that's where you're going to make cuts from. Audits still happen.
Yeah.
Audits happen in a recession. Doesn't matter. And there's not enough people right now. So it makes sense to me. Like I don't.
Do you think that advisory and consulting should be grouped into the accounting?
No.
It should just be a separate.
But people just see KPMG lays off X percent, and they assume it's like fairly distributed across so actually, if you've worked within one of these firms, you understand there are different groups, and I think you mentally assume like it was a 5% reduction from every single team. Right. If you don't know anything about this, you just KPMG, you're like, oh, they're the accountants. How did they lay off that many accountants? I thought there were no accountants. So, but if you're somewhat familiar with them, then you got to understand how layoffs work. And it's not just everyone cut 5%. It's like consulting group, there's no revenue. We got to cut 50% of this group. And then company-wide, it's 5%, but audit has not been touched at all. Yeah. That's how it goes. At least that's how businesses should be thinking about it when they make moves like this. I would also say, I wonder if they went to employees, to some of them, and offered for them to transition over to audit. We're underwater here, we're drowning our team. Do you want to try audit for a few years while maybe we get through the recession and the economy bounces back and there are more projects to take on? So I don't know, maybe there were some areas, but.
Well, the interesting thing about that is I think a good chunk of the people who are in advisory services at accounting firms are not even accounting majors. It seemed like a lot of them were just general business people or finance people. Not necessarily. I remember when I was interested in doing a rotation in advisory, and I was told those people have business degrees as opposed to accounting degrees.
Oh, you need to have an MBA or whatever.
And I have an MBA, and I'm like, well, I have that too. But I think now, all of this stuff I think just gives an appreciation for if you do have at least the accounting background, you'll be better at advisory services.
Yeah, you have more options. So that's true.
For all those auditors out there, stick with it because in a couple of years when everything bounces back, you're prime picking.
Totally. This is I think it's just a misunderstanding. There is an accounting shortage, but these layoffs were not accountants.
So let's see what the comments are. You want to take any reads?
All right, here we go. Honestly, I think firms are just doing layoffs and we'll just end up rehiring in the fall for busy season, creating even more of a cluster. And I guess we blocked out. Yeah, we blurbed it out. Agree with that. Cutting costs in slow times and we'll ramp back up. I don't know. That's a risky move to make. Like I said, there is a concern around talent retention and within the audit groups. I don't know. I think this is sort of, from an outsider's perspective, looking in and what's the most like evil corporate thing that could be occurring right now. But if I were running an audit firm, I would not take this risk for saving.
Also,
what is 4 months of payroll to like take a huge risk like this? That would just be idiotic. But cutting from groups where there's no more business, that makes perfect sense.
Also, the process of onboarding is like, it's a 6 month. I mean, like you spend so much money onboarding people, and like when you deal with turnover in general, like the last thing you want to do, it's going to cost you as much as it saved you, if not.
Do you
more.
know the average cost to replace an employee? Have I told you this stat before?
I feel like it's like 3 times.
So it's two times their annual compensation, and that scales. So if someone makes $60,000, it's 120. If someone makes $300,000, it's $600,000 to replace them. It's like that's the replacement time, but that doesn't even factor in the tenure of that employee at the company. Like I would argue, if someone's been at a company for 4 years and then they leave, backfilling that takes 4 years.
Yeah.
Because that person had 4 years of knowledge about the whole company, and it's way more challenging than that. So look, if you're these people at these firms who are running these firms, they know that it costs 2x a person's salary to replace them. They're not going to lay someone off for 6 months at the understanding that one, we might not be able to get them back, and two, even if we do, it's going to cost like 2x between ramp up and filling them and interview time and all that kind of stuff.
Well, so interestingly, the guy who had this initial response is an advisory guy, Alphabet Sam. So maybe it's a little bit of a denial.
There we go.
Or trying to pin it off onto that. Then Modbell here said, since I started in 2007, it's been a constant cycle of overhire because, we'll be booming in 6 months and short-staffed. And then we got to fire half the office, or the partners are going to have to pay in this year. Like, I won't say it alternates every year, but it's pretty damn close.
This is why you always got to be zigging when everyone else is zagging.
Yeah.
That's it. Like right now, it's an interesting discussion at FloQast. It's a time where profitability is being valued more in the VC market, but growth is going to get valued again at some point here. So if you're trying to play the game and play it out, is maybe now the right time to be investing in things like sales and marketing while other people are cutting. Yeah. Do you make that investment, and then in a year or 18 months, when everyone's like, oh my gosh, growth is all that matters, it's like, oh, well, you know what? Guess what? We didn't stop investing in that. We made the right decision.
You think about all the stuff, especially in the FinTech world and just in the tech world in general with all the apps. I mean, the app boom post 2008 was crazy when all of a sudden I think Uber started up around that time period. Yep. Where it's during these times of recession that those that have the cojones to lay it on the line and put their money where their mouth is are the ones that, as things come up, they're already gripping on fully tight. Yeah. Everybody else.
This is going to be, I think, quite the cycle, especially with the big tech companies doing layoffs and with the severances they're paying out. They're like, some of these Google people are getting over a year of severance for very high paying jobs. Yeah. And so all of a sudden you're a smart person who was at Google, you know what's going on, and you got a lot of money to sit around and think about stuff. And probably you have made enough money to also like fund your startup if you want to go in that direction. Yeah. And so I think a lot of innovation could come out of the year 2023 as these layoffs happen, and there's so much money out there, and then AI is around and it's making it easier to build new products as well.
Yeah, lots to invest in. I think the last guy's the comment that you've been looking for the whole time, though.
There we go. Boom. Someone supports me. What's this guy? Uberseed. All right. This is just plain inaccurate. The people who were laid off are mostly in advisory/consulting and enabling areas. I feel vindicated by Uberseed.
Yeah. We've been validated. And then this one I thought was interesting because it kind of gets into the more macro issue. The total number of accounting graduates is down. I think this is from Snoop Peers 8904. I think it was at its highest number around 2009 and slowly trended down since. It also appears after the decline has been somewhat offset with the outsourcing of India and started in the late 2000s and technology tools that reduced workload. Big firms also get the most out of new hires straight out of college, so they're less desperate than local firms.
Mm-hmm. Yep. And then we have another comment here. Wall Street Journal has done a number of stories in the last couple of years on how accounting is increasingly unappealing to college grads. So has FloQast. We've done a whole lot of research around the decline in talent around accounting. And then the degree requires too many undergrad credits. There's just too much job stress, lousy work-life balance. I would say they could have thrown an et cetera on there as well. But yeah, this is where we need to start rethinking things. It's not about extending the CPA window to 30 months. It's about solving this stuff. Accounting being unappealing for all these reasons listed and just us making it too hard to become an accountant. Those are the issues that need to be addressed.
So I wanted to use this opportunity actually to get into that macro issue because the CPA exam, I actually just got off the phone with Pete, who's
nice.
He's re-recording all of, he's been in neck deep re-recording all of the self-studies.
Oh, man.
Because of CPA evolution 2024, where the exam is changing, where there's going to be the 3 parts of the exam. And then instead of BEC, it's going to be moving to business analysis and reporting. You kept an elective, essentially. Business analysis and reporting.
I like that.
Information systems and controls.
I like that.
Tax compliance and planning. So you're picking which sector of accounting, which I think this is really good as far as elevating the profession goes, because it's showing, hey, there are 3 different avenues that you can take your accounting degree. Tax is one of them, but it's not all 3 of them.
Which one would you do?
Probably business analysis and reporting. I mean, I think there's the most value in information systems and controls. But I feel like I'm the most apt at business analysis. Well, I guess, I don't know. You had the reporting in there, and I've never really been a reporting person. I am a big controls person. Information systems sounds scary because it's like, am I a computer scientist? Like that was always the thing that scared people, I think, out of accounting information systems. It's like, whoa, is this like getting all tech and JavaScript and like, what do I have to know here?
Yeah, you're not writing code though. You're learning how systems come together.
So maybe,
I think this is a really great change. This is really smart of them, and you didn't ask me, but I would have done business analysis and reporting as well, but would have been feeling the tax compliance and planning not so much. That's not as
I mean, I think if I was back in college and they did this now, I would have done business analysis and reporting right off the bat. Knowing what I know now about the changes of the profession, the clear answer is information systems and controls, because everything's going to be based on that, especially with AI.
Yeah, if you're about to take the CPA exam, if you're watching this in the year 2024 and you're trying to decide which one to do, info systems and controls is by far is going to be the leader here.
And then the exam has actually some structural changes I wanted to touch on, which is a new way of assessing research and related critical thinking skills will be introduced. So I don't know what that entails, but it's a different way, I guess, than the normal simulations that we're used to. This is interesting. A new JavaScript-based spreadsheet will replace the Excel spreadsheet. I have no idea what that looks like.
Why?
I don't know. Maybe these big cloud companies, web forms are getting.
Is that what's going on? Yep. Okay.
Are they getting in there?
How do we get FloQast in the CPA exam?
The written communication task essay question will be eliminated.
Because ChatGPT can do that now?
Yeah, they can do that. I mean, that was my favorite part. It's like, I can write an email. I'm good at writing emails. Multi-stage adaptive testing in the multiple choice question testlets will be eliminated. So that's interesting because I use that to my advantage. I don't even know if you're familiar with that.
I do not know what this means.
So the exam is like real-time interactive, where based on the questions that you get right, it will give you harder questions.
That's true of the CPA exam?
Yeah.
I thought that was an MBA thing, but that's also CPA?
I never took any other major exams besides.
Okay.
I went to college where I got my MBA, so it was just a straight on through. But yeah, it adapts based on the answers that you're getting. And so when I made sure, a lot of people make the mistake taking the CPA exam where they would try to speed through the first module. That way they have more time later on for the simulations. But based on how you perform in the first multiple choice question module, the second part will be worth more or less points because they'll either give you harder questions worth more or easier questions worth less.
Oh,
and so I really focused on that first section, nailing it, because then I knew I was going to get more difficult questions on the second section. And then if I do well on that, I have almost enough points right off the bat to have already passed the multiple choice section in order to then go to the end where I didn't care if I missed part of a simulation. It's a partial credit thing anyway.
Okay.
And I really focused in on those. And I think that's why I passed FAR, is because I was like, why are these questions so difficult? And I was like, well, that means you're doing well. And I was like, yes.
All right, there you go. Okay, the inside scoop. Did you hear that from Pete Alinto? Did he let you know? Firsthand?
Yeah, right. I honestly, I don't even remember where I got that. I just have this information somewhere sits in my brain. But yeah, no, they're getting rid of that. So unfortunately, that hack will no longer be as valid.
Bummer.
So that's concerning, but not as concerning, or maybe not concerning anymore. What was concerning was First Republic Bank And perhaps the worst is over. This is from the Wall Street Journal. JP Morgan steps in to buy First Republic Bank.
This isn't over. This is
Not done.
It's going to keep going.
The dominoes continue to fall.
In my humble opinion, yeah.
What's the reason why this, like, is this just a, because SVB, obviously we had the whole thing, it was the tech startup, that whole issue, but what are these little shoot-offs?
So First Republic Bank is similar to SVB, but not as like acute of a challenge. So First Republic Bank is a lot of now really rich people. Instead, SVB was businesses like FloQast, where we have like $80 million in the bank and all that kind of stuff. First Republic is a person who has maybe $500,000 or something like that. It's a bunch of high net worth individuals. They have their personal banking relationships there. It's great customer service, all that kind of stuff. But they have the issue where a lot of their depositors are not, they're FDIC insured up to $250K, but they have more than that. So it leads to the classic run on the bank, exactly what happened with SVB. Fed said we'll guarantee all deposits. People freaked out about that, so they're not going to be able to do that for every single bank that's out there. And so here's the next domino to fall with one of the regional banks. And there are many regional banks. More of them are going to fail from here. And JP Morgan, Bank of America, Wells Fargo, HSBC, they're all going to make a killing. They're going to buy these things for super cheap. The brands are still going to exist. They'll be able to back them and bring them back. Like SVB, you already see it coming back, and it's not exactly what it used to be, but they're offering some of those same services. This is going to keep going, and it's just going to be like the rich get richer with all this.
So it's just when you have one of these high-profile situations, like with the SVB thing, that even the lay folks, or I wouldn't consider the people banking here lay folks per se, but everybody else is just like, well, should I be concerned about my money? And everybody just freaks out at their own respective local bank.
Panic begets panic. That's all it is with the run on the bank. Yeah.
I've been thinking about buying gold. But not I don't mean online gold. I'm thinking
physical
about buying
gold?
physical. I want a table of gold.
For what it's worth, I do own some physical gold, if that makes you feel any better about it. Gold coins are nice. They're cool. They're cool to have as well. I don't know, man. It's what a world for diversifying assets, and where do you put stuff, and even if you're under the 250K limit, you still got to worry about inflation, and is it good to have it there? So I don't know. What a fascinating time in like financial history right now. Yeah,
per Reuters, First Republic had a high level of uninsured deposits, like you said. Meanwhile, its loan book and investment portfolio also became less valuable as the U.S. Federal Reserve Bank raised interest rates, hampering its chances of capital raise. Everybody's doing it.
To me, the Fed has the most control in this situation. If they cut rates by, let's say they got just crazy, and we're going to cut it by a point something. People this would not be a thing anymore. It would be totally fine. Or if they just said we're going to backstop all deposits for the next 6 months while everything gets tamed down, like that would chill everyone out, and this domino effect would stop. But clearly they're not going to do that kind of stuff. So I think it's going to continue, and we'll see. Maybe the next FinTech Flo will have another slide up here with another bank, that got bought up. Pack Crust, something like that.
So just reading off the article for anybody who is not watching but just listening, regulators struck a deal to sell the bulk of First Republic's operations, heading off a chaotic collapse that threatened to reignite March's banking crisis, which continues now into May. JP Morgan will assume all of its $92 billion in deposits, insured and uninsured, and buy most of its assets. The FDIC will share loan losses with JP Morgan, an estimated $13 billion hit to its insurance fund, and extend $50 billion in financing. First Republic, the second largest U.S. bank to fail, lost $100 billion in deposits in a run after SVB collapsed. A group of big banks kept it going with a $30 billion deposit, which JP Morgan said will be repaid after the deal closes.
Yep. And then the bullet here, the final one. Analysts don't expect a First Republic failure to kick off a new round of turmoil in the banking business. That's what they have to say.
Yeah.
It absolutely will. You'd be foolish to think this is the last one.
I don't even think it's kicking it off. It's just continuing the roll.
It's continuing it, exactly.
So,
remember when inflation was transitory?
Yeah. Well, it's just crazy. What's just crazy now is like you've got like the tech market helping bring back up some of the economy. You got the banks failing, bringing it down. You got people all concerned over everything. All right, we're not going down the rabbit hole.
What a world.
Crypto Security Month has come to a close.
All right.
Tip number 4, watch out for fake account charges. Now, this is from blockchain.com for you and your clients. Watch out for fake account charges. Trusted platform security teams will always disclose that programs will never ask you to pay a fee or tax to unfreeze or unblock your account or wallet. Now, I don't know if you've gotten any of these things. I get these texts or emails, I feel like, on a daily basis where it's just like from XLEZ137 at Amazon / somebody probably pretend to be Amazon. It's like, your Amazon account has been locked. Like, click here to open it up.
Yeah, that's a new one I've been getting lately. I've changed your password here, kind of thing.
I mean, or we're suspending your, crypto account. Click here to unlock it, or you need to or if you want to click here to dispute it, or you didn't make your payment, so you need to update your credit card information.
I just don't believe anything anymore.
No.
That's what it has. So you have to be a serious professional skeptic in the world right now.
Yeah.
And I don't know. I haven't gotten any crypto things. I also don't use BlockFi, so maybe it's not a personal thing for me. But man, this is only going to get worse with AI.
Yeah.
Also,
I mean, I gotta say,
it's going to be so
though,
easy to run a scam.
So now here's the advantage that I think accountants have, especially auditors, in the future of AI, is we are professionally skeptical. So we at least have that. Everybody else has got to now learn to become professionally skeptical. We have it as part of our genetic makeup, I would say.
It is just built in. It's hard. We're hardwired that way. That's
so
good.
we are set. So anyway, many scammers will try to deceive you by presenting emails or texts that visually look like or replicate official imagery from the platform that they're imitating. Don't fall for it. When in doubt, ask a millennial.
There you go. There you go. Man, there's so much scam.
My mom
going
sends me
on
that
in
stuff all
crypto.
the time. She'll be like, it's like, I got this email I'm not sure about. I'm like, click on the email, and you clearly shows that that's not the email that it actually came from. When you look at the who sent it, and I'm like, yeah, it comes from some made up Gmail account.
And that's the one that pisses me off. I'm not saying your mom's a little old lady or anything like that, but when older people are getting scammed, that just pisses me off. It's such a crappy thing to do. And I mean, scammers obviously don't care about other people or anything like that, but it just pisses me off to no end. It's like some 85-year-old grandma living on her retirement.
You've seen the AI stuff with that now too. There's a whole trend where they have AI. This is a good warning for everybody too. Is there's an AI that what they'll do is they'll replicate your daughter or your son's voice and call the parents and be like, I have your, somebody will get on the line and be like, I have your son or I have your daughter. Play the voice. They're screaming, help me, please, like blah, blah, blah. They'll be like, yeah, you have to come, like, drop me off this money right now, otherwise they're getting it. Meanwhile, the kid's upstairs in the room.
Oh my gosh.
And like, that's a scary, scary place to be. Not going down the rabbit hole. Sorry.
We've been asked to not go too doomsday on AI.
But that is a good warning for everybody
concerning.
to,
Yes. You be extra skeptical in this new world.
So let's brighten things up.
How should we account for memes?
How should we account for memes? This is a little bit outdated by about 2 weeks now, but I just find it to be so funny. This is from Caleb.
I haven't seen this one yet. This is
the caption here is, my girlfriend just dumped me via TurboTax. And the conversation goes, have you done your taxes yet? And he responds, nah. And she writes back a picture from TurboTax. Here's the best filing status for you. Single.
Dude, that's amazing. That's epic.
Could you imagine actually doing that?
No, but it's one of the nerdiest and
People are savages
That's
now.
amazing.
They'll do things just for the bit.
That's
They'll do it just for the bit.
it worked. It's a good one.
Thank you. Let's get
the
Fiscal
screenshot
for
of
sharing
here's
this.
the best filing status for you single is amazing.
Yeah.
Very well. That's from Let's Get Fiscal.
She posted that one. She
All
shared
right.
that, so thank you,
Go, Kristen. Love it. Yeah, great work.
This one here, very relevant to our episode. This is from the Big Four accountant. When you find out ChatGPT failed an accounting exam. And who is that? That's
Downey Jr.
Downey Jr.
Hasn't aged a day in his life, it looks like.
No.
No.
Well, different from, I think, how he looks now, perhaps. But
I don't know how to explain that face. What is he just
it's just
relieved?
a sigh
relieved?
of total relief.
Excited?
We got on here a little article from Accounting Today, just the headline, ChatGPT bombs accounting class. Bomb's a strong word, but it failed.
It failed, yeah. Bombed. I don't know about that. You also need to ask, was it GPT-3, 3.5? Was it 4? Because as we saw in our episode, those are very different beasts.
Yeah, if you haven't seen that, we did a ChatGPT takes a CPA exam, a bunch of questions from Audit, Reg B, C, and FAR. We got a supercut short coming in the upcoming weeks, but the long episode of going through all the questions, it's pretty fascinating to see how there was a difference between the versions of ChatGPT, so it is getting smarter, how it sort of thinks through everything. But it is still failing audit, fortunately, for all of us auditors out there.
Let's go. Yeah.
So, a little debrief on that. And then a little timely humor as well. This is from Liquidity, which also I just love that name. I don't know if you want to read this meme off
I'm a big fan of Liquidity. Yeah, great stuff. I recommend the follow. So it's a shot of Jimmy Butler being very excited after beating, let's see, maybe the Knicks. Maybe it was that game 1 against the Knicks. So it says the remaining First Republic employees after updating their LinkedIn profiles to say they're employees of JP Morgan. So nice way to hack your way into a nice resume update there.
So I was going to ask, like, what do you think goes through the minds of people at the company that when it gets absorbed by a larger one? Like, is there a certain level of people who are like, oh, this is awesome, and there's a certain level of people who are just like, oh my gosh, this is the end? Or like, who's it benefit? Who's it good for?
I think you have both. So like what we saw at SVB, for example, is so like our personal banker, guy who owned our relationship, him and about 20 other people got recruited just as a group, and they all left to go to another bank. I'm blanking on the name of the bank right now, but they were all just like, no, I don't want to work here. We're out, and they all left. People at First Republic might enjoy working at JP Morgan, so maybe some are going to stick around. Personally, I didn't know. If you're like a personal banker, is it really that different to be at First Republic versus JP Morgan on your LinkedIn profile? I don't know. I don't process it as such a big win, but I'm also not in the banking industry like Liquidity is, so they know more than I do, so it must be better. But yeah, I'm sure some are going to be happy they're part of a bigger brand, and then others are going to be like, this sucks being part of a huge international bank that's probably just a lamer place to work as you startup at FloQast versus working at a bigger company. It's just different and more energizing. So
I guess it's the worst probably for the worst stuff are the people at the very top, right, who allowed the thing to fail, right, because they're just kind of, you're gone.
They are gone.
And now you have that stain on your resume.
Yeah.
Yeah, it was actually kind of interesting.
I don't think, but people like that always, they land on their feet. They'll be fine. They'll end up somewhere else.
My mentor actually, I believe he was a partner. I think he just made partner at Arthur Andersen not shortly before they had actually collapsed. Mm-hmm. Nothing to do with the Enron case, completely different area. But they got absorbed by Grant Thornton, and he ended up. That was a huge opportunity because he was able to take a team of like 20 to 25 people with him and build up the not-for-profit practice and just grew the business from a couple $1 million to like $50 million business in the region, mm-hmm. which was awesome. And so sometimes one man's trash is another man's treasure, and I think some of these companies or individuals or people have the ability to something else breaks apart, and it's like, oh, you can part out.
Yeah, similar story actually. My namesake. I'm named after him. He was a partner at Arthur Andersen. I remember we were actually at their house when the Enron news was coming out, and it was, he was a guy, he worked to retire. That was his goal in life. So it really sucked for him, but ended up getting absorbed. A lot of the LA people were absorbed by Ernst & Young here. And so you ended up, EY really built out their practice quickly. And my namesake, he was in the valuation group, actually. So he ended up getting recruited over by, I think it was Dun & Bradstreet, to go do M&A work for them as well. But yeah, just like people take advantage of it and end up finding new homes. And oftentimes it's like, whoa, I can get that person now. That's amazing. Right. Let me go hire them. And then they have a big opportunity at whatever new company they go to.
Opportunities are everywhere, especially for accountants.
Yeah, sometimes these things can work out well if you're an employee.
Yeah. So, this was a super smooth, to the point. We hit all the spots. We're in the concluding cycle now, so I'm feeling appreciation here and elevation for the accounting profession after all this stuff.
Me too. I like that AI is going to automate, in my opinion, the boring stuff. I feel confident that that's going to all happen. Be nice if the stock market was turning around. Things were going to get going again. I'll tell you, I hear through the rumor mill that some IPOs are getting in the hopper and are starting to gear up. So back half of the year, we might have the IPO window open up again. And, I think just when you see some companies going public, people start to feel a lot better around what's going on and everything. In my understanding, like for the IPO market to start again, someone's got to take the first leap. And it seems as though we're getting to that point. So I think that could be a big boom for the stock market overall.
What could be really good, I could see a later half of this year, probably sometime in the fall, maybe we get some Q3 numbers that maybe there's a summer boom of some sort, right? And you kind of enter Q4 with some high hopes. At that point, the plateauing of the interest rates by the Fed, hopefully that what they said is true or what they alluded to turns out to be true. No more spike, and then to see some IPO stuff. That maybe we're bottoming out. We'll pray. I'll knock on wood, but
that could be a good conversion of things coming together to lead for maybe a better 2024.
Yeah, so we'll see what happens, but this has been the FinTech Flo here at FloQast Studios, and thanks everybody for listening.
All right, have a great rest of your day. Thanks everybody. Thanks for tuning into the FinTech Flow. I want to give you a heads up that if you are looking for CPE credits, this is eligible for 1 hour. If you'd like to learn more, check out the link in our description to get those credits.